Hello, everyone, this is Bella. Today is the first moment of our formal teaching video. We will explain clearly in the initial course what is the meaning of various K-line forms. To lay a good foundation for future study, the most familiar form of candles should be the Japanese candle map technology. However, the content of this book is too basic, and the explanation of these candle forms is too formal, too biased to the form, which is not strong practical. Many people said that they cannot use it after learning. Today's K-line teaching will pay more attention to the nature of market movement and bring you to feel the strength of K-line. I want to make a point here: the same K-line form, different systems will have different names. For example, in the candle diagram there will be these hammer lines, called the evening star, but in our system, it's not called that. The name is not important, the important thing is that the candle form, what does it represent? And how to use it is the most important thing. What I'm going to do in future videos is I'm going to talk about form names, and I want you to memorize them. First of all, we should understand that all K-lines, no matter how small and insignificant, are meaningful. Each K-line shows us the traces of long and short bow rush. Mastering these details will enable us to seize the advantages in the market. There are only two states of market movement, trend movement and non-trend movement, so it's the same on every K-line. A K-line is either trend K-line or non-trend K-line. Let's talk about the trend K-line first. What is the trend K-line by definition? Trend K-line is the entity accounts for the main part of the K-line. The longer the entity, the shorter the shadow line, on behalf of the stronger the trend energy. Multiple or empty side completely control the market in this K-line. It should be noted here, although the longer the entity of the K-line represents the stronger the trend energy, but if it is too long trend K-line, it may be a high tide. It's a trend run out of energy, and we'll talk about that in a market-by-market context. The continuous non-overlapping trend K-line in the same direction is a rapid market on behalf of the trend of strong energy. In this section of the market, long and short side completely control the market. The market will generally have a follow-up action. Let's talk about it in the chart. The K-lines I have circled are trend K-lines, continuous trend K-lines. The less overlap, the less shadow of the K-lines, means stronger energy. We can also look at the trend K-lines in the short market that do not overlap continuously. The less overlap of the K-lines, the stronger the trend energy, and then the market also gives a follow-up. The ones I marked with arrows in the chart belong to the trend K-line. And here is another one that I forgot to label when preparing the material. Some trend K-line does not have any meaning. Some trend K-line, it represents a kind of high tide market, it represents the trend energy. In this line exhausted, the next price reversal. The specific K-line type represents what significance to analyze according to the overall situation of the market. Cannot take out a single K-line to say that the trend energy is strong or weak. Be sure to combine market analysis. What about this graph where I've drawn the arrows are all short trend K-lines. Some short trend K-lines represent strong trend energy, some short trend K-lines mean nothing, and some short trend K-lines, even though they're long, they represent kinetic exhaustion of short energy. I'm going to do it on a case-by-case basis, so don't worry about that, and I'll talk about that in future lectures, but I'm just going to give you a sense of what these concepts are. So what does the non-trend K-line mean? The non-trend K-line means that the entity of the K-line is small, the shadow line is long, and the shadow line takes up the main part of the K-line, that is, we often say the cross star. In the non-trend K-line, both the parties and the empty parties fail to control the K-line. And they have no dominant power in the K-line, so the price moves in the interval in the K-line. If we locate a trend K-line in the mini-period chart, we can see that any non-trend K-line moves up and down in the mini-period. All K-lines that are not trend K-lines are non-trend K-lines. So all of the non-trend K-lines are what we call cross stars. In some schools of technology, the term cross star is used to refer to the type of K-wire that has almost no solid lead up and down, which is a strict definition but completely unnecessary. As long as we know that the cross star represents the market, there is a pause in the movement, hesitation without direction, we do not need to care about it is not a perfect cross star. You have to pursue the perfect form of expression, find a perfect K-line. It is not conducive to your actual trading. The red arrows are all the non-trend K-lines that I've labeled, and we can look at the cross stars briefly. This is the same as saying that there is some entity, but in our analysis system it is also called the cross star. Including this one, it has some entity, but the lead is the main part. Looking at this K-line, we can clearly feel that neither side can control it. The market has a pause here. It's the same with the rest, and if you look at this one is also physically long, but the shadow limit is longer, and you look at this K-line and you still get the intuition that neither side has control over this K-line, and then it's the same for every label after that. As long as the shadow part of the K-line is long and the entity is not so outstanding, it gives you the intuitive feeling that the energy represented by the K-line is vague and uncertain, and there is no clear direction. Then these K-lines are called non-trend K-lines. One thing to note here is that if we look at what I've drawn here is a descending channel, this is a flag, and in this descending channel, a lot of the K-lines are non-trend K-lines, but it's still coming out of a wave of directional motion, and if I look at this, let's look at the K-line I have marked with the box. It is a long trend line, but they overlap each other and overlap each other. Although it is a trend, the K-line represents a strong trend. But because they overlap each other and form a trading range, there is no conclusion on the results of the K-line shape. Now we know the definition of trend K-line and non-trend K-line, and then we will take a look at the K-line shape and position shape of the long line. Now we will take a look at the reverse K-line, which refers to the K-line that causes a certain degree of reversal to the running direction of the previous K-line or several K-lines. The reverse K-line is one of the most reliable signal K-lines. The most familiar signal, the K-line, is the inverse K-line. Let's take this short reversal K-line, for example. As a short development K-line, it should preferably have a negative entity, as indicated in the figure, and it should have a long upper line, 1/3 or 1/2 the length of the K-line, and it should not overlap too much with the previous K-line. Then its shadow line should be very short. It is better to receive full, that is to receive the bottom harvest a no shadow line, that is the best. And then its entrance K-line is the latter K-line is better to strong entrance K-line, rather than that in the reverse K-line and then connected with an internal cross star, that is very weak. Such perfect inversion of the K-line is rare, and there is no need to limit ourselves to these definitions to judge a person for reversing the K-line. We have to understand the nature of reversing the K-line. What is the nature of reversing the K-line? In fact, it is first a tide movement, for example. In this flip root line, first it has a bull tide movement, and then a short break, a contrarian break, and then it is a reversal K-line. The reversal K-line in our last graph appears at 1 hour level, so let's put the K-line back 5 minutes. We can see clearly on the 5-minute chart, first there was a bullish surge, followed immediately by a bearish breakout, so its big level, on the 1 hour level, it becomes an inverse K-line, and we have to understand the definition of the inverse line, so that we can recognize many inverse forms, rather than looking for perfect developmental K-lines based on appearances, which don't make sense. Again, the nature of the reverse K-line, which is the nature of the reverse pattern, is that first there is a rapid upsurge in the trend direction, followed immediately by a contrarian, in this case a short breakout, so this is a reverse K-line, and if you look at the two K-lines that are marked by the red arrows, these two K-lines are actually standard development K-lines, and we don't have to look for perfectly defined development antennas. For example, if we look at the strict definition of these two inverted K-lines, it is not valid as an entity without a positive line. But we don't have to care about that at all. If we look at these two K-lines on the mini-cycle chart, we can see that first of all, it has a short spike. The drop of the institutional market was immediately broken by the strength of the bulls. In the small cycle it has a reversal. As long as we understand the movement behind the market, we can judge that it is a qualified reversal K-line, which is the K-line we can enter. I have said before that a reversal K-line should not overlap too much with the previous K-line, so here we take the K-line in the figure as an example. If we do not look at the background environment of the market, we can take this K line out separately. So here it's a really good bull development K line. It represents a sudden spike in the short movement. And then it's immediately reversed by the long, but it basically overlaps the previous two K lines. So if the K lines are overlapped, it means it's a two-way market, it's a trading band, there's no trend in the trading band, there's nothing to reverse without the trend, so it's an invalid K line. It is important to note here that just because we use the inverse K line to enter the market does not mean we should trade the reverse of the trend. It is always the wisest way to trade. If in a pullback of a trend, we use a reversal pattern to build a position, to add to the trend, then that's the best option for us, the best trade. And then let's look at a double K line reversal. What is a double K line reversal? It is two consecutive trend K lines, roughly equal in length, but opposite in direction. A double K line reversal is one of the most common reverse positions. In fact, we can view all reversals as some type of double K line reversal. This perspective can remind us that the market first moves violently in one direction, which is what we call a high tide movement, and then moves violently in the opposite direction, which is a contrarian breakout. The strongest moves usually start with a K reversal or a double K reversal signal. If you look at the ones I've highlighted with the arrows in the figure below, they're both trunk K reversals. They consist of two K reversals of roughly equal length, but in opposite directions. There are many variations of the double K line inversion, and it's a part of all inversion patterns. And one of the most important things in trading is that you have to be prepared when the pattern signals that a big move is about to take place. So let me just say one more thing here. Double K line reversals for small periods, that's single K line reversals for big periods, and we can see on the left is double K line reversals on the 30-minute graph. So let's take the period of the K line and put it in 1 hour, it's a single K line reversal, and as I said before, all the K line reversals, it all means that the market goes in the right direction, there's a high tide movement, and then there's a break in the opposite direction right away. So if you understand that, whether it's a single K reversal, a double K reversal, or even a clan reversal or a direct reversal structure, you can see it straight away. You don't have to stick to the surface to see. This K line to standard, single K line standard, to standard double line standard, all these do not need to look at. 3-line reversal is the market line 3 consecutive K line. So all reversals, as we said before, are a tidal wave, followed by a contrarian break, and when you understand that, a 5-minute KO reversal on a graph is a 15-minute double KO reversal, and even at a higher level it's a single KO reversal, it's the same, they all represent the same kind of movement in the market, so you have to understand that. And then let's look at the intrinsic K wire. The intrinsic K wire is the second K wire, inside the first K wire as if surrounded by the first K wire. That's the definition of the intrinsic K wire. Most of the inner K is meaningless. If you look like the box in my chart, it's meaningless. It's just a continuous overlap of the K lines, which represent the trading range. First of all, there is a round of rapid movement in front of the fall. I marked out the video of the front band. After the rapid movement of the fall, the price after consolidation appeared a rapid rise. The rise verified the horizontal resistance level of the band point. After the market verified the EN-force level, there was an internal K line entry form. Then why is this with the inner, enclosed signal, K line a good position building form? Because it first validates a resistance or support level very well, and then its signal K line is what I'm going to do, because its signal K line is a strong bear trend K line. The direction I want to enter is also short, so the signal K line is a strong trend K line in the same direction as my entry, which greatly increases the probability of winning my trade. Then, let's look at the outsourcing K line, which is defined as the second K line. The high is higher than the previous K line, and the low is lower than the previous K line. It is the second K wire that wraps the first K wire, and most of the outsourced K wires are meaningless. Like the ones I circled on the way. They are overlapping rows of K wires, which only represent the trading range, without any practical significance. Some outsourced K wires represent, it is a good position form. So if this outsourcing signal, the K line, it's a very long K line, when you come in, like the one in my picture, it's a good support level validation, a strong outsourcing positive line, but it's too long, and you want it when it closes and you come in, your stop loss is going to be under the K line, and in this situation with this loose stop loss, it is difficult for your profit target to form a good profit and loss ratio with a stop loss, and you lose a good entry position. In most cases, I will not choose to participate in such a trade. Then, there are a few outsourced K lines, which are high-quality signal K lines, such as the one marked in my chart. Why is it an entrance signal? So let's see. First of all, here is the horizontal in position, which I haven't drawn, but you can see visually, and then here is an upward channel. The upward channel which tends to dry and break down, and it's all rising, and I'll talk more about that in the future. So this is the market context. Let's look at the details of the market. In this outsourced K line, we see its high making a fake break from the previous high, but it closes below the previous low of the K line and closes near it. The short has complete control of the K line, and it is also a second position pattern, plus the K line is not particularly long, and it is acceptable to enter and stop losses behind the K line. So this is a strong and very good entrance K line, and I will talk about it in the future, so you can understand the definition of it. So the shape that we're going to talk about is called the wire mesh shape. And of course every system is called something different, some systems are called the wire mesh or something, it doesn't matter what the name is, and I always say it doesn't matter what the name is. What is the definition of the wire mesh shape? The barbed wire pattern refers to 3 or more, mostly overlapping K wires, represented as such in the diagram, where at least one of the K wires is a cross star K wire. This K line combination, which represents the market, is now everywhere in a narrow trading range. He indicated that the market is very hesitant at this time, uncertainty is increasing. As a novice trader, you should avoid this type of trading altogether. So I'm going to talk about this K line combination. It's called a second breakout pattern, it's called a low 2 for a short position, it's called a second breakout. As the name implies, it represents the breakthrough movement twice in the direction of the reverse trend. How to understand? So how do you understand that? Look at the several K lines I circled in the figure and the 2 negative lines I marked with arrows. We can see that the first negative line is the K line marked by the arrow, which breaks the low point of the previous K line. It is the first time that it breaks the low point of the previous K line. It is the second break below the previous low of the K line, representing 2 airdrops to regain control of the market and 2 countertrend breakouts. It is also at a level of resistance where the bull's efforts have not borne out and the bull gives up and leaves the market. Airdrop to see this signal after the establishment will be more active entry, the price will be low. The second break entry is my most common entry pattern, and I will explain it many times in the future, so you need to understand its definition. It refers to 2 breaks in the opposite direction, also known as low 2. It is called low 2 when you are short, and high 2 when you are long. So in terms of the K line configuration, if I take this short position structure, the low 2 second breakout is the second K line where the first point is lower than the previous low. Let's look at the K line shown by the first arrow, which is the first low below the previous K line. Let's look at our second entry K line, which is the second, the first point is below the first point of the previous K wire. It's a mouthful to read, but it's easy to put together a diagram to understand. This is my usual entry pattern, and you have to understand the definition of it. If we look at the second break pattern again on the small period, we can see that it is a double top on the small period, so all the second break patterns form a double top and bottom on the small period, and we'll talk more about that later. This secondary breakout pattern is also often used in moving average retracements. Let's see that I have these K lines marked in my box, it's a second breakout long pattern. Also called high 2, the first arrow is the first arrow indicating that the K line is the first high, the K line above the previous high, so the second arrow is inside here, the second K line. Higher than the previous K line, high point K line, the definition is very difficult to say, but if you go to the graph to understand it is easy to see. Here is a bull second breakthrough. In the previous round of bull rapid rise, the price has been called back, and then at the end of the correction pattern, bulls twice to the trend direction of breakthrough, is our entry signal. So let's move on to the minor period, and look at the secondary breakout pattern that we just had, and it creates this double bottom in the minor period. And as I said before, all the secondary breakout patterns in the senior year, they tend to leave this double top and bottom trace in the minor period, and most trends reverse with a double top and bottom. I'll talk more about that in the future, but just understand the definition for now. The K line I used in the chart is all 20 EMA, and 20 EMA represents the short-term trend of the market. I use 20 EMA as a visual aid, not to rely on it too much, not to say that some people use the moving average. Such as here, back and forth to short, come back and short, it's not that practical, it's just a visual aid for me, and as the price nears 20 EMA. On the way up and down, I have to decide whether to enter or not based on the specific K-line shape. Any period of moving average, any moving average organization collocation is meaningful. The key is how you use it. After you've gone through all of my lectures and you've understood all of the rules of price movement, you can use the average group of any period flexibly. What I'm going to talk about today is some very basic stuff, which is that price becomes the basis for analysis, and I'm going to talk about it for you to learn it later in the lecture. Because if you don't understand all of this, you won't be able to continue the rest of the course, so I hope you can learn and understand it in the future. That here to emphasize is not to put these basic content just learn to operate, if the operation is really so easy, that there is no poor people in the world. So how do we understand what we've learned today in the rich tray? Let's look at this graph. First of all, on the left side of this graph, we see people who are bullish on the market. Why? Because it has a lot of long trend K lines. These long trend K lines rarely overlap. There are no short K lines found in it, there are no contrarian K lines found in it. This is a bull rush, and then the market began to appear some inverse K lines, and there are more and more overlap between K lines, then it has an upward rush, into an upward channel market, there are two sides trading, so at the end of this channel there's a lot more overlap, he goes from the up channel to the sideways trading band, and the K line is basically overlapping, and then after the break, the market, it goes through another sharp movement, and you can see that the sharp movement is dominated by the short trend K line. And there's very little overlap between K lines. The long K line is also very little, so it is a short rush, and after this rush, there is a large overlap in the K line. The overlap of the K line is a two-way trend weak energy, in this case it is the trading range. I hope you can in the recovery to feel the market, to feel the strength of the price energy. Now the market is in a strong trend movement, or is it a lateral movement in this overlapping trading band? Okay, that's all for today, and I'll see you next time.